Let's go across and interact with the management of vguard that's joining us on the show right now. We have Mr. V. Ramachandran, the Chief Operating Officer of vguard Industries, joining us. Mr. Ramachandran, good morning. Help us understand what the company's quarter 3 numbers have been like, because they have missed street expectations on a consensus view. The company had reported a double-digit revenue growth in quarter 2. Right now, you see that has dropped to roughly 9% for quarter 3. Now, despite quarter 3 being a festive quarter, can you help us understand why this has happened? Because your margins have been slightly under pressure as well.
If you were to look at our overall number, right, we have posted about close to 9% growth. I think it's about 8.9%. You may separate this as wires and non-wires. Yeah, the non-wire business has grown approximately around 15%. Yeah, so which is more or less in line with our plan as far as non-wire business is concerned. The wire part of the business, right? I think we've had commodity fluctuations, and there has been downstocking in the trade that has resulted in flat to marginal decline in wire sales, right? And the consequence of both is reflecting in the overall number. Typically, what happens is once the pricing stabilizes, the subsequent month it will recover. So this is not a loss. It is just that whenever prices are going up, channel tends to upstock. When prices are coming down, they tend to destock till they have comfort that it has stabilized, or there is a tendency to expect it to go up. So I think that's as far as the top line is concerned. As far as gross margins are concerned, we have actually expanded our gross margin by 2.5%, right? I think yes, I think you are referring to the EBITDA drop, but that is fundamentally again because of the shortfall in revenue. Yeah. So we're not concerned about it. I think on a YTD basis at the end of the year, hopefully, when copper prices recover, I think next quarter we should be able to cover some of this ground. Yeah.
All right. Good morning, Mr. Ramachandran. When we talk about your Sunflame revenue, that has actually seen an uptick of 4% on a YY basis. But help us understand, what kind of growth are you penciling in for this segment going ahead, and will you be targeting a double-digit growth soon?
No, I think Sunflame performance has to be seen in the backdrop of the larger performance of kitchen category. Yeah. So I think kitchen as a category has slowed down over the last 2.5 years, and I think the slowdown in kitchen is continuing. And you should probably see results of our competitors also coming up, and you'll probably notice that the sales are flat there too. Yeah. I think as far as Sunflame is concerned, right, even though the overall great growth has been in lower single digit last quarter, GT and modern trade and e-commerce, all these have grown in double digit, yeah, mid-teens to high teens, yeah. So I think overall, because of shortfall in sales in CSD CPC, overall numbers have come down, yeah. So and institutional business, yeah. So these areas have seen some challenges, and that's resulted in the numbers going. So the fundamentals of the Sunflame business remain strong, and I think as the market recovers, and as we are able to what I would say participate in all channels well, I think we should start to see double digit growth in Sunflame too.
Okay, Mr. Ramchandran, also help me understand what your split is looking like between the South and the non-South markets, because if you see, the share of your non-South market revenue has been increasing. So what are some of the growth strategies or expansion plans for non-South markets as well? And going ahead, what is the revenue mix going to look like between both the South and the non-South markets?
So I think there is still significant room for us to grow our business in non-South market. If you will see South, typically for our portfolio of categories, right, there should be, should the market should be contributing about 36-37% of the overall, maybe 37% of the overall market should be in South, yeah. Which basically means that we should potentially be able to grow our share to about 60 to 63% from 48% that you see today. Yeah. We do believe that the progress will be gradual, but we should be able to increase our contribution by 2 to 3% every year, right? So that we come close to a national average. Yeah. mainly this will be also achieved primarily through two levers, right? One is, I think we still have the opportunity to expand our reach, mainly in terms of the depth of the distribution. The other area that we are also focusing on, the different categories that we got into, we have got into them progressively. So in older categories, where we have been longer in the market, we have already achieved, a significant share. Almost 65% in many categories is actually coming from non-South. So many categories we have achieved this wherever the categories are older in the portfolio. So I think a main challenge now for us, I think also is to step up the contribution of wires in non-South. I think with that, and with the geographic expansion, I think we should pretty much get to this over the next 4 to 5 years, or get close to the national average of contribution in the next 4 to 5 years.
All right, Mr. Ramachandran, with this, we'll let you go on that and appreciate you taking the time out and speaking with us on the earnings, and all the best for the upcoming numbers.
If you like this video, then like, share and subscribe to ET Now.